Good evening, everyone. Tonight, 28th of September 2024 at 8:30 p.m. Malaysia time, we are going to go through what are the month of October 2024 forecast on the global trends using astrology and trends research. The theme for the month of October is obstruction. So we will see what exactly the obstruction means here. Let's go through the agenda tonight. As usual, I will start with the introduction, the disclaimer, and then the brief recap of the last month's forecast to check what we have forecasted and what exactly has taken place, the influence of 5 elements energy in October 2024, the forecast using astrology, and also October 2024's geopolitical and financial forecast by PC using the trend research to see whether astrology and also both the trend research that what will happen in October is aligned, and then the summary that we will make on the October's forecast. Let's go through the disclaimer here. The content here is purely based on our study in the global trends related to the research and the 5 elements in Chinese astrology. It's for you to use as a guideline in your investment decision. And what we have done is that we will put it accordingly to the research that we have done in multiple sources, like PC is multiple sources from the mainstream and also from the from the KOL as well, right? That the sources that he put in. So we will try to report maybe what we have seen here. It could be slightly different from the main media. Okay, and then it's not biased to any country. We are just impartial to all those different countries. Okay, what we've seen. Then exercise, we advise all our participants here, even our astrology and global trends member here, to exercise cautions in investment, especially in such volatile situation. You still have to do your own research if you want to invest. We will not give any advice on stock, and if additional is needed, it will be through email, which is accessible to all our members of 2024 Astrology and Global Trends. Okay, so the members will know how to reach us through email for any related advice that they needed in the Telegram group. Okay, I saw that there is a lot of new names that call in tonight. So just let us go through what we have done. We have actually started Astrology and Global Trends since 2023. And we have published our first book for the forecast of the year on both astrology and global trends, end of, I think, November 2023 at the time, to forecast on the water rabbit year.
2022.
2022, yeah, that's right. To forecast on 2023. So right now, I think it's already 2 years plus, more than 24 months. And so far, we are very proud to say that our forecast is about 85 or 8, I think more than 80, about 80% accuracy. So what we have done is that we deploy 2 methods in Chinese astrology and trend research to forecast on global trends. So my forecast is more on aligning to the planetary energy fields, and those elements actually can focus on the economy, which I have scientifically stated and done in my YouTube channel on how it can be done. Okay, what are the energies, why it can be used to forecast the global trends or the economies. And I think so far we have bring a lot of values to our own members as well, those that follow us, especially, in the beginning, even those that comes for our book launch, Unlock Your Wealth Potential, we have already talked about gold investment 2 years ago, right? BC?
Yeah.
Yeah. Okay. So those have take action, congratulations. Okay. Yeah, really. I want to congratulate those that take actions, and also in our work. You can also follow our work in our book in Unlock Your Wealth Potential. Later on, we will put a link there where you can download a free chapter and have a look. And I hope that everyone also has downloaded a free copy of 2024 um forecast. And we do not mind you downloading, because what we have predicted or forecast there, it happens. Okay. Yeah. So let's do a recap on the month September 2024, what we have forecasted. Yeah, we talk about the wood and the earth energy reduced with the combination of rooster and dragon. So in the month of September, we do see the sim metal comes up. Okay. So I forecasted the high possibility of increase in precious metal. So I think the precious metal that has really significantly increased is gold. Okay. And potentially, the global conflict will be escalating, especially in Middle East. We do see that as well, because the 7K is very strong in the Koyu manner, means that is violent global event that's happening. This is not related to the Li Chun chart. I also check the seasons, the 24 seasons solar terms chart as well. Okay, so that I think you all can also see the political shift. So the theme was month of gradual progress, where um, we are progressing towards a very chaotic situation. This is what happens. I think the military activities in the Middle East that we see, I think towards middle of the month, right? Or the third week of the month, we already started to see that. And now I think it's still happening and it's still escalating. Okay. Compared to, I think compared to August, where I have forecasted it was relatively much more peaceful month compared to September. Okay. And then again, gold prices is up. Okay. Yeah. Let's go through the month, October 2024 energy. So this month is going to be a very interesting month as well, because the chart shows a clash of the month pillar is clashing the dragon. So it's earth and earth clash, but on top, they are still friends. Okay, so it will points to it to maybe it will points to escalation, could be of war, of military activities. And in Southeast Asia, it also there will be potential disasters that we are looking into, maybe the Southeast Asia water along the Philippines corridor there. And then what we can see is on top is like friendly wood and wood, but collaboration, there will be like a lot of collaboration between government that's happening. Maybe there's some big events, some collaboration of the government. BC can elaborate there
Yeah, that
in
would
his
be
recap.
during the coming BRICS Summit, lah, I anticipate.
Yeah. And but internally there could be, some disagreement, some problem as well. Okay. Yeah. Let's look at the hexagram of the month October. Is obstruction. Actually is water over mountain. So a lot of things are really not very clear. When the water means clouds, right? Covering the mountain. You cannot see the peak of the mountain. So everything will not be clear. Okay. Which makes it quite difficult to really, do a forecast as well. So there might be economic slowdowns, stagflation that will continue or will be even worse. Then there will be also escalation of geopolitical conflicts or internal political strife in the government itself. Okay. And also, actually, October 3rd, there's an interesting event that is going on. It's annular solar eclipse that's happened in South America. So we shall see what will happen to the South America. And yeah, in the year of evaluation hexagram on abundance, in the month of October, maybe towards middle or end of October, we will be the peak. We were in the sixth line already of abundance. So this is, in the sixth line, actually in the classic, it says that it's isolation where there's house, windows, but everything is closed. Nobody can see what is happening inside. Okay. But actually there are people in the house. That is what is used to describe the sixth line. Okay, so it could be something like overheating, subsequent crash that happens, and could be geopolitical isolations and social stratification, unrest, and also long-term blindness. People because people cannot see is all covered up, cannot see the sunlight. So it means that if you cannot see the lights, that means you are also confused. Okay. So this is what is happening in the astrology side on the energy using both the hexagram and also the this one the Chinese astrology tools like the 60 pillar 夹子, and also even I think in Thai Su, if I look at the chart for I think 59, if I'm not mistaken, chart number 59, the yin tuna, is also a lot of multiple, multiple facing each other, multiple conflicts. So there are two or three. So this means that there will be military activities that is escalating. Okay. Yeah, I think that's it. We see from my side for the forecast of the October. So let's see what the global trends research shows that potentially could happen in October as well. Over to you, PC. I will
Yep.
stop sharing. You
Yep.
want to share, right? I will
Yeah.
stop. Yeah, okay.
Okay. Thank you, Evelyn. So just need to enlarge the screen. Okay. So as usual, we'll look back what we predicted but did not happen. I think the thing was that Trump was supposed to be sentenced in the month of September on 18th. But then that sentencing has been postponed to after the elections. Okay, so it did not occur at all. Then we expect more countries in Europe will announce a pullback in supporting Ukraine as Germany and Poland made it clear that they could no longer support the war in Ukraine. And this did not happen. So maybe if, let's say, December is a month of obstruction, then October is a month of obstruction, then I think that it will be an obstruction to peace efforts, especially in the Middle East as well as in the war in Ukraine, because there are parties that are very committed, okay, to their agendas. So we also say that the consumers in the US will be under a lot of stress because of their debt. And the indebted household is a time bomb. So right now, the US household debt has reached a new record high at 17.8 trillion at the end of Q2 2024. And non-housing debt stood at 4.9 trillion and housing debt stood at 12.9 trillion. You can see that from this chart, it has never come down at all. Okay, the only time it came down was during the global financial crisis. But since the Fed began easing and government began printing a lot of money, the debt has continued to go up and has now reached new record high. So delinquency for single family loans, where the borrower has lower credit scores, okay, is the most on record. So this is the one. it has shot up to here, much higher than during the period from the 2008, 2009 financial crisis. Okay, so that's shot up to new record.
Yeah, gradual progress to new records, right?
Yeah. Then the other thing is that um the all this happened just as delinquency in credit card debt and auto loans are also rising. Okay, you can see that the subprime auto loan is now trending up very aggressively. I mean the subprime auto loans over here, it has trended up much higher than during the financial crisis. Okay, it's still at a peak here, and subprime and the prime auto loans, the one in red, is going up very aggressively. So that means that whether they are prime or subprime, uh, people are facing more challenges in meeting their loan payments. Okay, and here you can see that the credit card delinquency rate, they are all trending up. Okay, and the gray one here, loan delinquency rate, credit cards. Okay, here, NYFed credit panel. Credit card loans, 90 days delinquent is rising up very steeply as well. Now, this was the period during the global financial crisis, and it doesn't seem very far when it will hit the peak during the global financial crisis. So all these are actually signs that the US economy is not doing well. Because if its economy is doing well, the people shouldn't be so heavily indebted. Okay. So the other thing that we got right was that the CRE crisis remains unresolved. Okay, number of houses put on sale increased from 884,000 in July to 909,000 in August. We say that more and more houses would be put on sale. Berkshire Hathaway has sold Bank of America's stock in 10 of the past 11 weeks, starting from mid-July, unloading total of 218.5 million shares valued at 8.9 billion. Now, this is a warning sign from Warren Buffett that something is not right with the US banking system. The Fed cut interest rate by 50 BPS, and with 2 times 25 BPS cut planned for the remainder of 2024. And another BPS cut in 2025 and 50 BPS cut in 2026. Now, this will bring the interest rate down to 3% in 2026. So the thing is whether the Fed will cut much earlier than projected because of a lot of things seems to be slowing down. And despite the fears of recession, we said that the stock market will remain well supported. The S&P gained 92 points or 1.6% month to date as of 26 September. There's no doubt that the US recession risk is there, but because of the money printing, for example, the M2 money supply in the US was increased by 116 billion from July to August. So all these are new liquidity that are added into the market, and the US government keep on incurring debt to try to sustain the economy. In the long term, it certainly doesn't look too good, okay, because anything that is driven by debt will actually have finally, okay, where everything suddenly crashes. So we forecasted that the Fed interest rate cut will push precious metal higher. Gold gained $153.30 per ounce or 6%, while silver gained $3.17 per ounce or 10.8% month to date as of 26 September. And in Europe, we said that Europe's economy is hanging by a thread, and this is the news that are recently out. German Institute expect economy to contract again in 2024, said sources, and French bond yield surpasses Spain's as investors mount budget woes. Now, Spain used to be quite a pristine country, and it was not part of the PIGS country. Why PIGS? PIGS. Okay, because those countries were Portugal, Ireland, Greece, and Spain. Okay, these four countries actually have a debt crisis in Europe in 2012. So France was not even there. For France bond yield to reach Spain's level means that people really mistrust the sanctity of the French government bonds. Okay, so this, of course, we didn't highlight, but it's still a economy woe for the Europe as a whole. And the French bond yield crisis is something that we predicted months ago, okay, that France debt could be in trouble. So sometimes what we predicted may not immediately reveal themselves, but over a period of 1 or 2 quarters, then it becomes significant. So we spoke about disagreeing parties in Europe pertaining to tariffs on Chinese EVs. And here, Germany faced an uphill battle to block EU tariffs on Chinese electric vehicles. Okay, Spanish PM urges EU to reconsider tariffs on Chinese EVs. So there is disagreeing parties. And China's retaliation, China's cherry delays plan to build EVs in Spain on EU tariffs. So this is what we predicted when we did our session in August, but now is being revealed in September. So if we look at the US economic indicators, CPI rose 0.2% month on month in August. Year on year, it grew 2.5%, down from 2.9% in July. Core CPI rose 0.3% month on month in August. Year on year, it grew 3.2%, unchanged from July. PPI rose 0.2% in August. Year on year, it gained 1.7%, down from 2.2% in July. So all these inflationary figures is giving Powell or the Fed the green light, okay, to cut interest rate. But more often than not, as I mentioned very often, the US inflation is being manipulated to suit the Fed purpose, okay, which is to cut rates. If you follow the shadowstats.com which has been following US inflation using the same metrics as has been used during the 1990s, the inflation rate in the US is actually much higher. But over the years, they have adjusted the measurement of it. Okay. And retail sales rose 0.1% month on month in August. Year on year, it gained 2.1%. Net retail sales less CPI was 0.4% negative. So here, net retail sales means using the year on year retail sales minus the CPI of 2.5%. So industrial production rose 0.8% in August, year on year unchanged from July. National Association of Home Builders Index came in at 41 in September, up from 39, but it's still in contraction. Anything at 50 or above is a expansion. So the construction industry still remains in contraction. Now, housing starts rose 9.6% month on month in August, while housing permits rose 4.6% month on month. Existing home sales fell 2.5% month on month in August. Year on year, it fell 4.2%. New home sales fell 4.7% month on month in August. Year on year, it still rose 9.8%. Pending home sales rose 0.6% month on month in August. Year on year, it still fell 4.3%. September PMI for manufacturing came in at 47, while PMI for services came in at 55.4. So manufacturing in US, has contracted. And if we look at the payroll report, manufacturing jobs over the past 1 year they have lost more than 1 million manufacturing jobs. And services is still there, okay, because services is something that as long as the stock market goes up, the services sector will also be in expansion because the services are including all types of services, brokerage services, financial services, all those kind of things will actually still be positive if let's say the stock market continues to go up. Now, this session we'll talk a bit more about the US government debt. Now, in August, the US government budget deficit exploded to the upside, raking in $307 billion in receipts, but spending a staggering $687 billion, resulting in a deficit of $380 billion. And if you look at it over here, Medicare and Social Security is one of the biggest, okay? But if you look at here, net interest is 80 billion, okay? So it is very near to the national defense, which is at 83 billion. So, but one interesting thing is that for those who are still unaware, yeah, the Medicare and Social Security are actually not, they are unfunded liabilities, okay? Which means that they don't have the money, but if let's say they need to pay out, they have to borrow from the debt market. That is what it means by unfunded liabilities. So if you go to the usdebtclock.org, okay, the total US debt, which means government, private, and household, plus unfunded liabilities of Medicare and Social Security, total about 1,112%, if I'm not wrong, of the US GDP. So everyone knows that the US will continue to borrow and it will never be able to repay its debt. It will never even be able to pare down the total debt at all. It will just keep on increasing because interest rates have increased. Social Security is a continual process of borrowing and paying. Okay, and there's so many, spending that the US need to do, especially national defense. Okay, the US outspent the next 9 countries in national defense. So total budget deficit for the fiscal year from October 2023 to August 2024 stands at 1.897 trillion. Okay. And that means that with the fiscal year ending in September 2024, likelihood we will see more than $2 trillion deficit in the government's budget deficit. And the most important thing is that between now till 2028, which is somewhere here, okay? Here is 24, 25, 26, 27, 28, okay? These 5 pillars here. The US government needs to refinance almost 20 trillion of debt. This is just refinancing, They need to refinance. And on top of that, we are not talking even additional debt that will be added into the system. And that is why I believe that the Fed did a 50 basis point cut, and moving forward, they will cut more because US debt interest payment has become unsustainable. And if the US want to borrow more moving forward, it needs low interest rate. And this is the US annualized interest payment on debt. As of Q2 2024, the last 12 months of debt payment was 1.097 trillion, and that's almost 1.1 trillion US dollars. And the thing is that if the interest rate is not cut, then of course the bond yields will not weaken. And because the bond yields have actually surged when the Fed increased interest rate, we have this massive nightmare here. Okay, unrealized losses in the US banks reached 513 billion at the end of Q2, better than the 517 billion at the end of Q1 2024, but still far worse than during the global financial crisis. This is where it was. And if you measure this and this, it's like almost 10 times bigger. So situation has become dire and some banks could utterly fail. Rumor of a major bank is in trouble. Now, this is widely spread in my Twitter feed, but no one is disclosing which bank. It's just that someone is suggesting that, according to them, which they cannot reveal, a major bank could be in trouble. And we haven't even counted the damage to the CRE crisis has done on the bank's balance sheet. If you look at banks, their assets are actually loan given out, and loans for commercial buildings, which are now a lot of it underwater, is also pulling down the asset quality of many banks. And this is just from unrealized losses from securities, okay, which means holding US treasuries as asset, but the value has declined so much that they are underwater. And we have not even talked about the unrealized loss, okay, in commercial loans. So what could happen in October? We could finally see many small and medium-sized banks reporting higher provision for credit losses and earnings fall off the cliff. More houses will be put on sale as property tax and income and home insurance increase and amid mounting household debt. So one of the key things is that there was one smaller bank which increased its credit provision, credit loss provision, so much that the bank stock actually fell more than 20% in a single day. So that's just one. I think we are going to see more coming to the surface. So weak economic indicators may push for calls for more Fed easing and more stimulus, but will only weaken the US dollar. I believe that if the situation becomes dire, okay, there will be the Biden admin will just print more money. Okay, if let's say the Fed will still go on its schedule to cut interest rate based on their projection. But if let's say banks are starting to show a lot of weakness, involving maybe one or two larger banks, then I think the Fed may revert back to QE, okay, without cutting interest rate first. So October has been traditionally been a volatile month. Major stock market crashes such as the panic of 1907, crash of 1929, and the infamous Black Monday 1987 all occurred in October. Central banks
Okay,
will try to ward this off.
you know why October is always a very challenging months for the financial markets, such as stock market, because October is actually end of the autumn, the metal month. So that is where the metal went. If there's certain structure in the chart of the 60 jiazi that happens, then potentially the clash will happen. The crash, the market crash will happen. Especially this one, I think 1987. These are all metal periods also.
Okay. Yeah, thanks,
Yeah.
Evelyn, for pointing this out.
Yeah.
So I think central banks will try to ward this off by more monetary easing as economic picture turns gloomy. And that's why right now I think global central banks, they are um, really involved in interest cutting, okay, because they already expect that the economy will slow down. And that is one reason why the ringgit is very strong lately. I think even the Singapore dollar has been pretty strong when compared to the US dollar. At one time, it was about 1.36. Right now, it's about 1.28. So ringgit at one time is 4.7. Right now, it's 4.12. So a lot of the Western banks that started cutting, and the Fed cut has been very aggressive. So one of the key thing is that, like for Malaysia, our Bank Negara still holds the interest rate steady. Okay, it didn't cut in following the footsteps of the Fed. So that's why the ringgit actually strengthened a lot. So this is also, sometimes people say that cheap currency is good, but I think, a good economy stems from having a strong currency, not a weak currency. Weak currency is often used as an excuse by corporations to urge the government to cut interest rates so as to encourage export. But the thing is, even if the currency is strong, okay, you are able to your imports actually are much cheaper, and this will keep inflation at bay and also help increase the purchasing power of the people. So not necessarily that cheap currency is good. Okay, so that's why and I believe also there's an influx of funds moving from the developed market, yeah, because their stock markets have all hit record highs. Okay, especially Europe. But right now they are trending down because of rapid deindustrialization in Europe. So I think there are funds coming from overseas, including the US. If you look at it, the gain from the S&P were very aggressive early of this year, but recently the gain has sort of like slowed down a bit. So that's why I think if the US dollar has weakened, as I mentioned, it's a life cycle of money. When the US dollar starts to weaken, especially when the Fed announced they are going to cut interest rate, a lot of those funds that are invested in the US market would quickly sell US dollar while the US dollar is strong and buy emerging market currencies. So that because with the stronger US dollar, they can buy more. So then with this huge amount of emerging market currencies, they invest into the stock market. When the Fed starts to cut interest rate, the currency that they hold in emerging markets actually appreciate. And not only that, because they have invested in the market, the stock market also start to move up. So they have a double whammy. But as the Fed began to cut more, the emerging market currency began to increase higher in value. So when recession finally hits, the Fed is at the bottom of its rate cut cycle. Then the economy starts to trend up, but the US dollar is so weak. So what they do next is that they sell the emerging market stocks. That is why emerging market stocks will actually come in cycle. There will be a fall as they unload their shares in emerging markets and convert the higher value of the currencies by buying more US dollars because it has fallen so low. And then they invest into the US economy, the stock market goes up, then they make money. So this is how the cycle of money is, with money coming and going in the global arena. Okay, just for information. So because October being a volatile month, that we need to exercise some caution. Okay, and I believe that with the Chinese government launching a massive stimulus and a lot of rate cuts and government support, I believe that the gain in the US stock market will actually start to slow down because there were a number of interviews with a number of fund managers. They say they are now very bullish on China. So they don't keep a lot of cash ready. So what they do, they will sell and then get the money to invest. So that's why I think that most of them would see that the S&P is showing signs that it has been, the rally has gone up for too long, and they are showing signs that the gains are slowing down. Most likely they will divest and then invest in the Chinese market. So USD could weaken further ahead of the launch of the BRICS Go Back unit in October and drive precious metals higher, because part of the announcement of the BRICS Summit in October would be a lot of speculation, okay, will be the introduction of the unit. And it is 40% backed by gold, and it is a stable coin that will be the trade settlement unit, okay? And that means that it's like a barter trade actually. We keep using our local currencies in the trade, but at any one time, let's say quarterly or half yearly, that we need to settle. Okay, which means if I want to pay off or I want to settle the bill, then it will be using the unit. So this unit, I don't think that it is like a cryptocurrency that will be introduced into the market for people to speculate, but it will just be among the BRICS nation used as the stable coin and to settle transaction. Not every transaction will mean that there's there will be the unit. It will still be local currency because every central banks had a quarterly that they need to square off, or a country needs to report its GDP and square off. Then that is when that settlement would likely be used. So recent trend in futures market suggests that bullion banks have lost control of the futures market, as any attempted sell-off is met by a wave of buying. So, if you are not long into market as I have been, during the mid 20 like 2013 to 2015, the bullion banks can actually one day sell $2 billion worth of paper gold. And that would bring the gold price down by as much as $40 to $60 a day. But right now, whatever attempt that they make, okay, it will maybe drop about $20, $30, but the next day, okay, it moves up. So they cannot continue to unload paper gold into the market like they can do about less than 10 years ago. So when they unload, okay, the price of gold can drop 40 to 40, 30, 40 or 60. Then the next day they unload again. So that's why the gold price can be depressed for a very long time, because no one wants gold to go up, because if gold goes up, it only means that the US dollar will weaken further. Okay, so if we look at Euro area core CPI, this is, sorry, this is the previous month. Okay, I think we skip this one because this is from the previous one. We'll go direct to China. So economic indicators in China, CPI came in at 0.6% year on year in August, up from 0.5% in July. Month on month, it rose 0.4% versus 0.5% a month ago. Core CPI came in at 0.3% year on year in August, down from 0.4% in July. PPI came in at negative 1.8% year on year in August, down from 1.8% in July. Retail sales climbed 2.1% year on year in August, down from 2.7% in July. Industrial production went up 4.5% year on year in August, down from 5.1% in July. Fixed asset investment went up 3.4% year on year in January to August, down from 3.6% from January to June. You can see from all here that the economic indicators for China actually fell in the month of August. So this could be one of the reasons why the PBOC have to come in very strongly to boost the economy. Now, goods trade volume expanded 6% year on year in renminbi terms in the first 8 months of 2024. Export rose 6.9% year on year, while imports climbed 4.7%. In US dollar terms, the country's foreign trade in goods stood at 4.02 trillion from January to August, up 3.7% year on year. Export rose 4.6%, while imports increased 2.5% year on year. Trade surplus expanded by 11.2% year on year. to 604.49 billion during the same period. So China export market is still thriving, okay, but its internal consumption and industry is seeing a slowdown. If we want to compare about a year ago, retail sales were actually around 4 to 6%. Okay, right now it has fallen below 3%. And industrial production last time is around 6 to 8%. Right now it has fallen below 5%. Fixed asset investment previously were around 4 to 5%. Right now it has fallen below 4%. So all this is showing that there is significant slowdown in the Chinese economy. So in terms of home prices, major Chinese cities recorded falling home prices in August. China's large and medium-sized cities saw month-on-month declines in both new and second-hand home prices. In the country's first-tier cities, new home prices edged down 0.3%, narrowing from a negative 0.5% drop in July. Second and third-tier cities registered declines of 0.7% and 0.8% respectively. Price in second-hand homes fell 0.9% in first-tier cities, 1% in second-tier cities, and 0.9% in third-tier cities. So you can see that a lot of the policy that they have introduced previously is not yielding the kind of improvement in sentiment. The housing market remains very weak. And the average survey urban unemployment rose 5.3% in August, up from 5.2% in July. So the real estate market in China remains weak. Declines are still prevalent, and there's no indication of when this will stabilize in the near term. The weak real estate market is also part of the reason why many consumers have held back on spending. Most consumers have their savings vested in home equity, as home equity has declined by 30 to 40% since 2021. They are converting their disposable income into savings to make up for their loss in home equity. Total savings at the end of June 2024 was 20.2 trillion versus 19.3 trillion at the end of 2023. So this is preventing them from consuming. And if they have lost, let's say 100,000, they will save back the 100,000. Okay. So generally, slowdown in major economic indicators are the main factors influencing the recent monetary easing policy initiated by the PBOC. Now, the PBOC's objective is aimed to unlock the potential in savings to drive the economy. That's the reason for the interest rate cut. The savers will have to look at other alternatives to realize better yields. And this helped a migration from savings to investment. By providing funds to support the stock market, the PBOC hopes to create an impetus for the savers to invest. The other objective is to help revive the real estate market at a faster rate, since earlier policies' impact have been lukewarm. The implosion of the real estate market has also affected major steel, cement, and building materials producers, which are the backbone of China's heavy industry. So the Chinese heavy industry actually has fallen quite a lot. At some time ago, some of the steel producers, their stock listed in Hong Kong, their stock prices can be around $3 to $4. They pay a very, very, very good dividend. At one time it's about more than 20% yield. And right now their stock is valued at $1 or less. Okay, that particular stock. So that is how the impact of the slowdown of the real estate market is. But there's one economist that I follow who is based in China that gives a very good explanation. He says that for the greater part of the last few decades, China has been growing its economy based on hard assets, okay, such as infrastructure, building of the cities. So all these are actually hard assets. And with slower population growth, the blue collar workers, are a diminishing population. So China right now have built up to a certain level that I don't think they will keep on pumping a lot of money into infrastructure and building mega cities because they have already reached that stage of development. So China right now will be moving towards a soft asset kind of development, which means how to improve its technology. Okay, and that's why we see a lot of attention being paid to high-tech manufacturing, into robotics, into AI, into chips, because that will be no longer the hard assets, and those would require a more knowledgeable workforce. So a lot of the Chinese population have actually undergone uh, vocational schools or gone to the tertiary education, universities, colleges, and they have become very skillful. Okay. And that is why it's timely for them to go into this kind of high-tech industry for China next phase of growth. Because as the population becomes more knowledgeable, okay, your blue collar workforce will actually start to shrink and your white collar workforce will actually expand. So this is why the transition. And that is why Chinese economy, if you look at it, if they already built up so many, okay, there's nothing to build, and therefore China is poised to collapse. No, okay, whatever the China expertise of engineers and scientists, they are moving to other countries to develop their infrastructure. Okay, and some of the blue collar workers who are very experienced, very knowledgeable in supervisory position or managerial position, they are moving along with their companies into those markets. But China by itself, okay, will not be spending that kind of money in building more hard assets, but rather developing its soft assets, okay, which are people and technology. And ever since the launch of the PBOC's initiative, the Hang Seng Index ended the week up 13.13%. Shenzhen Composite Index ended the week up 17.86%. Shanghai Composite Index ended the week up 12.87%. And interestingly, okay, this is showing that there's a lot of belief that the PBOC's targeted stimulus will actually revive the real estate. We have the Hang Seng Construction Index ended the week up 18.27%, and the Hang Seng Property Index ended the week up 13.95%. So over the last few years, the Chinese stock market has lost $6.5 trillion since reaching a peak in 2021. Now, due to the US sanctions and poor real estate market sentiment, many funds have shorted the market aggressively. And because of the sudden jump, a lot of, like you see all these jumps in indices just now when I share, actually occur over 1 or 2 days. So a lot of people still have not awakened to the fact that a short squeeze is coming. So in the coming weeks, we could see many short covering, okay, ahead, because a major short squeeze will materialize. Because for so many years, they have shorted the Chinese stock market. And right now, this sudden stimulus have actually boosted a lot of the market sentiment. Okay, if those of you who have watched the uh, interview on CNBC with Tapper. Tapper is a well-known fund manager. He said he's buying everything. Okay, when he was asked what kind of stocks to buy in this Chinese stimulus, so he said, "I'm buying everything." So that is how bullish they are, and because of that, it will cause a lot of stocks that have been squeezed down to actually do very well. Now, just at the start of the session, we talk a bit about NIO. NIO is an EV producer. Its shares have been shorted down from 60 over dollars down to about $3 plus just a few weeks ago. And since that bottom, yesterday it closed at $6.50, mainly because the company was losing billions and billions of renminbi every year. Okay, 5 billion here, 5 billion there. So, but then the company is using the fund to expand its network. Uh, increasing its network of charging stations. And not only that, it also built out its battery swapping stations. Now, battery swapping stations is going to be a major game changer, because from just selling EV, it created a business called battery as a service. Okay, we have heard about AI as a service. We have talked about software as a service, okay, and platform as a service. But it has come up with a battery as a service, and it has already recruited an alliance of car manufacturers who will go on board this battery of service. So the battery as a service is very different, because the battery is changeable at the station. You no need to pay for the battery when you buy the car. You just need to sign a contract which allow you to access the battery swapping station. So imagine if you buy a car and the battery is one of the most expensive component. Okay, you borrow a car loan which also include the battery, and you pay interest for the battery. But right now, with battery as a service, you take out the car battery from the original price of the car. So the car naturally becomes cheaper, okay? And consumer will like it, because you no need to pay an interest on the battery, and whatever that the battery worth, okay, is through buying a service that you continue to renew every year, not a one-time off payment, okay? Like in the case where you buy a car. So this will revolutionize the car industry. And they recently put up information that their latest car model, the L60 or Envo, built in the similar way like Tesla Model Y, but outperform it in many aspects. So there were Deutsche Bank say they have 30,000 confirmed orders, non-confirmed orders, but interest is around 60,000. Okay, and all this just within a few days after launch. So that is why the CEO say they were likely to go into profit next year. So imagine if the company is having a few $billion loss, and then they go into profit. So there's going to be a huge shift. Okay, and because of that, a lot of people, there's a lot of investors' interest, because they like the business model. A lot of the money is spent building up its entire channel of battery swapping stations, car charging piles across China. So this is a very interesting story. Okay, not stock advice, yeah, just sharing a story. But it is a stock that's been so shorted, okay, from $60 over down to $3 plus. So imagine if it start to go up, okay, even if it go to $20, is a multiple of almost 5 times. Okay, just saying. Okay, and it's one of the most heavily shorted stock. So it's up to you. Okay, just sharing a story how the shorting of Chinese stocks have actually destroyed the value of many Chinese companies. Okay. So what could happen in China in October? PBOC monetary easing will create immediate impact on the stock markets in China. Beijing has also given free hand of provincial governments to act responsibly to support the PBOC policy and create a vast multiplier effect on the economy, driving on okay to effect on the economy, driving consumption higher. Now, this includes giving free vouchers to the low-income group, okay, waiver of limits to second home ownership, and waiver of foreign ownership of properties in selected cities and districts. So even the government is coming in on board, okay? Consumer, especially retail, travel, hospitality, F&B, real estate, and construction sectors will do well. They in turn will boost the manufacturing, heavy industry, and logistics sectors. So that's why Tapper was saying, buy everything, okay? And recently from the members, I actually share with you all a list of companies that actually give very high dividends, around 8 to 9% dividend yield. These are actually the toll operators, yeah. So in that sense, okay, it will actually help because they are part of the logistics, and more economic activity means more usage of the available infrastructure. So China's inflation is still low, so the impact is not going to drive prices to dizzying heights. Furthermore, more oil and abandon is $100 per barrel of oil target. China's stimulus will also be aided by global central banks cutting interest rates, so there is no severe pressure on the currency. Nevertheless, the shift in policies will not dampen China's quest for leadership in the high-tech manufacturing and technology independence. In fact, we can expect new breakthroughs in the coming months. So China exports will also remain strong. And if we want to look at the impact of the Fed and China, the Fed will be cutting interest rate moving forward with 150 basis point cut. Sorry, not 150, 100 BPS. Okay, with 100 BPS cut by the end of this year. At the same time, many central banks are already in their rate cutting cycles. All the above are inflationary but have different consequences. The US inflation is still high, but China's inflation is still low. You imagine that China's inflation is just 0 point something percent, but US is 2%. So China has diversified its energy consumption with renewable energy contributing a large portion of its energy needs. This is not so in the US. So consumption of 1.4 billion people will drive up the price of raw materials and push the price of commodities higher across the board. The government also encourages companies to buy back shares to support the investment community and even provide low interest loans to do so. So what will happen will be with the stock market reaching dizzying heights in valuation, we could see an inflow of funds into Chinese stock markets, which have been one of the worst performing markets in the world for the last few years. Now, this would boost the strength of the Chinese yuan against the US dollar and help offset inflationary pressures. Now, another thing that happened was actually in Japan. Japan newly elected prime minister is said to be supportive of an independent BOJ. That means that he will not restrict the BOJ from undertaking actions, even if they could hurt the economy. So upon news of his election, the yen actually strengthened. Okay, this shows the USD to yen pair. So the yen actually fell from more than 146 to actually 1.42. So the Nikkei index in response is set to open on Monday, down more than 4%. Okay, so what comes next is, his speeches that will talk about foreign policy and all those. Some say that he is a hawk because he urged the establishment of an remains to be seen. Okay, how the relationship between Japan and China will evolve. Let's talk about gold. Now, central banks have been major buyers of gold to date. Collectively, they bought the most gold on record in first half 2024. Now, this is from the World Gold Council. You see, during the first half of the year, this actually outpaced all the other first half of the year gold purchases. So probably it will shoot up even higher. We do not know. But with the BRICS, if they announce the unit, then there'll be more countries probably wanting to buy gold, because this time around, BRICS is not going to include new members, okay? But they will actually have a group where they call aspirant members of some sort, okay? So which means they can trade via the BRICS, okay? It's just that they won't be a member yet. Okay? And I think that in this group, there are dozens of countries. So let's see what happened then. But meanwhile, I believe that central banks would be buying gold. Now, if you look at it, central banks buying gold has already pushed gold up to almost $2,700 US dollars. Now, imagine central banks continue buying and investors suddenly feel the gold rush and they rush into gold, how much that could actually impact. Now, just as a comparison, during the stagflationary period from 1970s to 1980s, overall investment funds allocated about 5% in. Right now, the allocation is actually 0.5%. Okay, just 10% of what happened in 1970 to 1980. Don't say it go up to 5%. Even if it goes to 1%, okay, that will be double the amount of investors' participation into the gold market. So that is a very interesting development because right now investors are still buying technology stocks. Okay, they are not even investing heavily into the gold market. And okay, it goes to show how the behavior of central banks are. Okay, they are the US reserves in terms of US Treasury reached a peak here, then it started to fall off. And during this period, okay, at this peak, gold was actually at the bottom, but right now it's trending up. So this goes to show that weaponizing the US dollar has been one of the biggest mistakes by the US government. The unsustainable US debt is another reason why central banks are moving towards gold as a major reserve. Countries are dumping US dollar in favor of gold, especially as we head towards BRICS Summit. With central banks already in rate cutting. And now, in terms of geopolitics, war in Ukraine will intensify with Russian targeting major cities. Strikes into Russia now is very has intensified their bombing of Ukraine. So NATO is already involved stealthily. A direct involvement by targeting Russian cities with missile strikes could widen the war zone beyond Ukraine's border, and this comes as a warning from Russia. Military conflict in Middle East is set to be intensified. Unconfirmed reports indicate that the US 101st Airborne is now in Israel. This was from a Twitter feed. I'm not sure whether it's true or not because I don't see it in some of the major headlines. Sometimes people could be spreading rumors. So that's why I say it's unconfirmed report. Yeah. Meanwhile, Israel and Lebanon has been exchanging missile strikes against each other with added intensity. So back to you, Evelyn.
Yeah, actually, our forecast align, right? There will be intensified military activities, especially in October. I think Chinon just stated that Israel just killed the military leader of Lebanon.
Yeah, they bombed an entire block, if I'm not wrong.
Yeah, okay. So let's go back to, let me just share my screen again.
I think
Okay.
the one in Europe, I will add in the slide later. It's just that suddenly some of the slide like
Yeah, our
disappeared.
member
Yeah,
will get, yeah, our
yeah,
member will get the slides. Okay. Yeah, yeah. Okay, so yeah, before we go into the summary, just a bit of, for those who are interested to do their birth chart analysis on what to expect or glimpse on the year ahead of 2025. Well, now I have an exclusive offer to everyone. Okay, so the price actually is 218. If you have one or more friends that join together, that means if you can get another friends, it will be 188 for both of you, with 5 pages of report on what you expect for the year 2025. Actually, year 2025 is going to be very challenging. It's going to be a very interesting year. Everyone should get a copy of our astrology and global trend forecast book. Okay, so last year we forecasted like the inflation will go up, some of the things, the military activities that's escalating. I think all of it happens, right? BC.
yeah.
Yeah. Okay. So then your own energy, how is it going to impact the year's energy when it comes in? How is it going to impact your own energy? And there are some people, it will be a year of really opportunity for you. Okay, so I think if you are interested, then we can, you can go through this report. There will be 5 pages of report, including the good and the challenging months, and each month's energy as well. It's very comprehensive for this price. The normal price is actually 299. There will be also 40 minutes of online meeting to explain on the report as well. Okay, so if those that wanted to get that yearly report free, you can do a live energy reading. If you have not done any reading on your Patsu chart or on your birth chart, okay, to understand yourself, you can do so with the with your chart about you, about the 5 elements, about yourself, the personality, you, and also the social circle aspiration, how you interact with the chart, your journey, the luck cycle, what you see, and what is the best opportunity and best approach for you. That means the recommendation, okay, for you to sort of improve and transform your life. Okay, so all this that if you want to have life energy and 2025 year analysis, it will only be one 499. Okay, so and I will give you the form later on to fill in if you are interested. So and lastly, the announcement on our 2025 astrology and global trends forecast. When we write the book, we also find that 2025 is going to be a very interesting year. Um, the 2024 is the first year of period 9, so everything has not really set in yet. The energy, slowly, the energy will set in 2025. In fact, there will be a lot of bankruptcy. This year already a lot of bankruptcy reported. There will be a lot of traditional businesses that will be replaced. Okay, so and also watch out for our announcement in October 2024 when these books will be available. Okay. For those you wanted to have a feel of what astrology and global trend forecast book is, we have already opened up 2024 astrology and global trends forecast book for download, and we still have a few months left. You can really benefit from this book to stay ahead of curve for 2025. Okay, for the price you're paying and the information to get, I think it's really priceless. Both PC and I has put in a lot of effort into writing the book. Yeah, this book is not written by AI. AI can never write such book. Can never do a forecast. Okay, for those that you think this book can be written by AI, as advertised, that you can write books in few minutes. Okay, you tell me that you can write forecast book with AI. I would like to know which software you use. Okay, so I like to challenge people sometimes. Okay, because I've done my research well enough to know that it's not possible at this time. And even though AI can understand the interaction of 5 elements, but it will not be able to, to really tells you what really it means. It does not, it's not live. It does not have the experience. I use a lot of AI. Okay. In some of my work, that is very true because I learned AI. Okay. And actually, this is one of the skills that everyone should learn also in 2025, in the period 9. So we will announce in our Telegram channel for our members, special offer, and also for those that interested in join us, you will also get some super early bird offer as well. Okay. Yeah, let's go through the summary. The conflicts between nations will be escalating in multiple regions. Potential There could be potential natural disasters, but I don't see it as worse as in the Dragon Month, where there's earthquake. I think earlier this year in April, right? And also the current situation of whatever the market that is bullish will still remain in October. Okay. In October, potentially it could still remain. Hey, over to you, BC.
Yeah, as I mentioned, the China market could outperform next month because of the short squeeze, as well as a lot of funds will try to ride on the wave of stimulus. Now, due to central banks are already in rate cutting cycle, gold and silver will likely gain in October, especially with rising global tension and soon to be announced gold-backed unit in the BRICS Summit in October. And Europe's economy will remain weak. Just to share, a lot of the European uh, uh, PMI for manufacturing show weakness. Retail sales in not in UK but in the EU has also been very weak, and there is a lot of disruption the in Europe because of demonstrations and such. So US debt will continue to worsen, okay, as the government continues to pump the economy through more debt issuance. In fact, I think this coming week, the Fed will actually sell close to 100 billion in US treasuries. Yeah. So again, it's all through debt. Whatever the GDP is, okay, is all driven by debt. And in the US, for example, the amount of GDP so far this year, okay, has the amount of debt issued this year has been higher than the GDP achieved this year. Okay, so that is outpacing GDP, which is a very bad thing, which means that if $1 can make $1.20 last time, right now, $1 can only create 60 or 70 cents of GDP. So maybe we have the Q&A.
Okay, let's go through the chat if there's any Q&A. It seems that there's not many Q&As. Here I have answered Mitra's questions on the solar eclipse. It actually only impacts certain regions of the world. So I don't think it's that great. And moreover, the impact is in South America side. Okay, so anyone has anything to ask tonight before we call it a night? Oh, okay. Any good news for crypto? Jeremy asked, yeah, BC? Okay, before
I
BC,
believe that the okay for crypto.
pardon?
Yeah, yeah. I'm saying that the US government may approve the crypto options, which means they can use options to get exposure to the crypto market. But I'm quite skeptical because all these are financialized assets. Just like they use options to control the price of gold and silver and other commodities, I believe such options, although they say will be used, will actually expand the exposure and drive liquidity. I worry that it is something to actually control the price of crypto to force more cyclical moves so that people will actually sell their crypto, and then the likes of BlackRock, the big Invesco, all these big hedge funds or investment banks will then sweep the crypto market, and then they hold all the most of the cryptocurrencies. Uh, because the end objective is that they want to hold Bitcoin, okay, but they will use a lot of financialized assets to force you into selling, just like what they did to the gold and silver market. So if you want to get exposure, I think it's best that you hold your own in your wallet, okay, or in a certain exchange, a very secure exchange, okay, that you can keep there and then sell only when you need to, okay, and not based on um investing in the ETF or the options. So this is just my opinion, okay, but if you are doing trading, then it's fine because your end objective is not to hold Bitcoin. You want to actually make money from the cyclical moves. So if you are a TA specialist, then perhaps it will be meaningful for you.
Okay. Yeah, we
Okay.
already says actually in our book also we stated that crypto is something that everyone should look into for period 9, and specifically in the Telegram channel. Sometimes I also give some tips that when to go in into the crypto as well, and which crypto that y'all should this one. Actually, if you follow my YouTube channel also you can see that. Okay. Okay, so
Okay.
yeah, another one is Cheng Yi, she asked that Malaysian KLSE market will be bearish